Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. I'm going to talk about the Chinese situation today. China is often considered just the marvel of wonderful political engineering of an economy, that they're going to be the engine that saves the entire West. The reality is that China has some massive problems built up because of this top-down engineering by the politicians of that economy. So we're going to go and talk about the details and talk about what does that mean for us here. All of these videos are short-term updates about what's been going on for the last few months that follow up on the Come Storm video we did 2 years ago that gives you a big picture of what's happening in the world economy and the dramatic effects that's going to have on your life. If you go back now, it's interesting because we're prescient in a lot of things that we talked about, but the really big things that you need to prepare your heart for and potentially your finances as well are still to come. So again, the link is free. It's right near this video. I checked that out. Let's get into talking about China. The markets are wanting China to bail out Europe, but this is a little bit past tense because I've been going over 3 months of news. At first they kind of said yeah they would, and they actually were trying to blackmail Europe and saying, well, give us full membership in the World Trade Organization and then we'll bail you out. Europe wasn't real keen on that. But the reality is China is not in a position to be doing massive bailouts, especially when it's stupid. I mean, they have thrown some money at Europe. They've lost a lot of money in doing that. How much money do you think China is willing to lose in order for Europe to get bailed out? The reality is it probably would take at least $3 trillion to fix Europe's problems. Well, China doesn't have an extra $3 trillion. They have about $3 trillion, I think, in total reserves. But if you count all their massive debts, I mean, it would just be stupid of China to do that, and they're not going to do that. China announces plans to liquidate U.S. Treasury holdings. So we've been warning about this for a couple of years, and China is now very much outspokenly saying we want to reduce the amount of U.S. Treasury holdings we have. We think they're going to go down in value. We don't want to hold as much as we are. They're not selling hand over fist, though, because it would destabilize the market and just destroy everything immediately. And they understand that, and they don't want to do that. So they're trying to get out as they can without destroying the market. But they're telling us point blank what they want to do. They would prefer and they said, rather than hold those, we'd prefer to hold great U.S. companies. So they kind of see there's some tremendous U.S. companies. The United States has a lot of amazing business acumen and a lot of incredible innovation in the companies. The problem is the government has grown so large and bloated that it's in serious trouble. And so China's kind of realized, wait a minute, we own the government, but the government's not the part we want to own. We want to own the companies. So they've actually said they want to own more and more of the big, wonderful companies in the United States and less of the government debt. Let's see, the 1.7 trillion credit bubble in local Chinese debt in the different provinces. So what happened in China is the leadership in China, the Communist Party at the top, said, we want growth. And so they told the local provinces, you need to have this much growth. Well, okay, they can do that by building things. And so they would build cities that no one wants to live in. They would build all kinds of fancy roads and airports and train stations and all this infrastructure, which if an economy is really down and out and has nothing, if it's just a bunch of people, dirt farmers, if a government will spend money on infrastructure, that actually has a huge rate of return for the economy as a whole. So it's a good idea in that way. But what China's doing goes way beyond that. It's not a good idea to build roads that no one needs, to build train stations, airports, ports, malls, office buildings, homes that no one needs. There's no return in that at all. Actually, there's a cost to upkeep of that. So it's a horrible idea, but the provinces are like, okay, my boss says I gotta have growth, so I can have growth by spending money building these things. And so it produces a GDP number, which is their goal. We want 10% growth on GDP. Well, okay, they've had that, but it's not sustainable. When an economy builds in a free market way, the growth is sustainable because there's new things that are happening all the time, and that growth begets new growth. when it's just the government spending money on silly projects, there's no growth that's produced from the growth. There's costs that come from that. And so that's what happened. These local areas are massively in debt, and they're just assuming that China itself is going to bail them out. So China as a country doesn't have a very big debt, and especially I think their debt is smaller than their reserves of US dollars and other things. But when you add in all the local debt, they have a problem. On one hand, the United States could say the same thing, but the United States can tell California, look, you're going to go bankrupt, we're not going to support you. It's debatable whether or not they would do that, but they certainly could do that. Well, China's different. China's a communist country at the top, and if they do that, they get thrown out. So it's an uglier situation. China's going to blow up. In the long run, China's going to be a fantastic place, wonderful things going on. In the short run, there's serious, serious problems there. Multiple signs of, one other thing that China the provinces will do is they sell land for income. Well, that makes the books work now, but then next year you have less land and you don't have that income that you had. So again, everything they're doing is not sustainable. And the world is looking for them to bail out the rest of the world. It's just not going to happen because they haven't been doing things that are sustainable. Multiple signs of Chinese economy slowing down. The Chinese Communist government puts out, let me drop the word communist. All governments put out shady information. China has a little more control on things because of their communism, and so they're probably able to put out shadier information than the U.S. government does, but the U.S. government certainly does a lot of that too. But if you look at outside numbers like shipping is way down, gambling in Macau is way down, commodity orders down, you can see that China their economy is really slowing down. Chinese generals have been calling for war with Vietnam and Philippines over sovereignty of the South China Sea. There's oil in there. These generals are starting to feel their oats and wanting to fight with somebody. So that's a bad sign. Reports in October of China having 2 times the stockpile of copper previously reported. So copper's been looking pretty weak. A lot of people look at copper, they call it Dr. Copper, as a sign of what's coming in the economy, because copper is such a useful inherent part of construction everywhere. If demand in copper is good, that probably means the economy is going to be good. If demand in copper is bad, that probably means the economy is going to be bad. And that's looked at sometimes as even a better indicator than the stock market about where the economy is going. Well, copper's been looking pretty sickly in and of itself, but when you consider that China's been stockpiling twice as much copper as the market previously thought, that means they don't really have use for that copper, they're just buying it to stockpile it. That means the economy is even a lot sicker than it seemed like. Rodman and Renshaw, which is a China-focused broker that as recently as September they had a big presentation. They had 25 Chinese companies that they're presenting and they're really pushing them. They've stopped all China stock coverage. So it's perhaps a sign that there's massive fraud going on in China, and the books of all these companies are fraudulent, and it's just a scary thing if you're long China. People showing up at real estate offices in China and rioting, complaining, huge drops. They'll go in and they buy a piece of real estate, and then the next day the company selling that real estate realize they run out of buyers, so they're dropping the price 25%. Here we would think, well, it's the brakes, but there I guess they still have kind of a communist mindset that shouldn't happen, and so people are rioting, getting upset, and so again, that's just what's going on in China. Factory strikes across China as orders are slowing. There's an estimate out of Hong Kong, 1/3 of the Chinese factories owned by Hong Kong companies could close or downsize very soon, meaning hundreds of thousands of jobs lost. And you have to understand that there's a history in China. As long as people are working, there's more and more people working, the price of food is stable, then the government stays in power. When those things change, the government gets thrown out of power. So the communist government is very nervous about these things. But there seems to be a lot of indication they're probably going to be thrown out just because of, things are changing. The economy is just changing. I don't know whether they're going to get thrown out or not, but historically speaking, it looks like they might. Manufacturing and real estate numbers in November from China show slowing, but they announced more QE. They're going to print more money, so everyone got kind of happy and thinks everything will be fixed. There's still a mindset, even though over the last 3 years the markets have proven, or history has proven, that all this money printing didn't really fix anything. Still, the market has a mindset that if we just print more money, that'll fix things. So, hey, the market's happy right now. China's agreed to lower interest rates, and the reality is the problems are serious, and that's probably not going to be enough of a fix. Thank you for watching this video. I hope you enjoyed it. Again, if you haven't seen The Coming Storm, there's a link to do so for free. Thank you, and God bless you.